Hello, this is Victor Santana, and here we're looking at the weekly chart, ETF ticker DIA, which represents the Dow 30. And we're going to go ahead and start by analyzing first the trend. And what we have here is this red line, as you can see it moving up, which is the 50-week moving average, and the green line, which represents the 21-week moving average. As you can see, we have these trends one on top of each other here with price action right above it. So basically, we are still in the bull market until we break the 200 and trade lower. So what we have here is we're looking at, looks like we're having 2 weeks pullback, and this is today, this candle here, and this is last week, all of last week here. So by analyzing this, we put in an indicator down here called the CCI, Commodity Channel Indicator here, and we put it on a 4 reading, so it's reading the 4 past weeks. And what we like to do is keep an eye on the negative 100 right here, and also the 100. So whenever it dips down to the negative 100, this is where we consider buying the dips, and once it gets up to the 100 area, that's we take some profits and hopefully let our profits run, or rest of the position run. Okay, so here we're looking at the dip here. So this is our setup based on this one candle. It dipped down to negative 100. So now what we're going to do is we're going to put an order above the high of this candle, and as long as it doesn't break above it, we're not going to enter. So I know we do have a long way up to get there, so it's not likely it's going to make it right away. Give you a good example what I see has happened. If you go back to January, we had a similar situation here. We had a one strong down week, and then we put an order to enter right above it. And then the next week, since it only traded within this range here, we put an order above this price action here. And of course, this next week here, price has gone all the way down, up, but didn't break above this area here. So we then trail our entry price down here. And then on this week here, this is where we get the entry, we get triggered in, and we got this move, nice move up here. So that's basically how we trade it here, buying the dips and taking profits on the rallies and letting the rest of the position run. Okay, so looking at the Dow here, we are oversold here, and however we're too far away from the top, so I won't really consider a chance of getting in maybe this week unless we really get some super news and it just erases all this loss to make new gains. But we'll let the market tell us what to do, and that's how we play it. Now let's go over to the SPY, which is the S&P 500. And as you see here, look at the trend first, uptrend. We have a nice strong uptrend. And then we look down here on the CCI, and you can see we have an overbought situation. We got a setup, and we just have to wait till we can trade above on this candle here, the high of 198.45. So we'll just be patient and wait for the next signal. Next thing, we're going to look at the NASDAQ, which is the triple Qs of the ETF. And on this one here, as you could see, the trend is still up. It had a small pullback compared to the other two. And looking at the indicator here, it has not reached negative 100. So there's still potential it may trade lower, which may be down to the 92 area to consider looking for entry positions. And this, we do get our fake outs every so often, but we have more success than the fake outs. I would say 70-80% win rates compared to the fake outs. And here's one fake out just to show you how it looks like. We have a signal here, got a breakdown here, got it under negative 100, so we look for put a buy above this next week. Sure enough, you could see that tail went up higher, triggers us in, but then we put a sell stop to get out below this, and sure enough it triggers us out on that week. We're out. So we wait till next week, and the week after we're back again negative 100. We do the same thing, put an order to above this tall candle, including the shadow or the wick, whatever you want to call it. And next week, since it didn't break out higher, we put an order above this one, and this wick here we got triggered in, but it closed lower, so we put our exit right here. So here's your risk, this is where our entries right here, and then sure enough, look what happened. So this nice move made up for this little fake out here. That's what I love about this particular strategy. Now let's look at the Russells IWM, and as you see, it's been the weakest of them all, and it has broken under the 50-week moving average, which is like a red flag. And here, this is today, so we're putting an order right above here. So if it could break above this zone here, then we'll consider entering into the market. All right, so that's where we're at right here. Okay, so that kind of gives you an overview of how the markets are working, and you can apply that to the other ETFs, and they all work in a similar fashion. Next video, we're going to go ahead and look at the IBD stocks here, the top 20, for those that like to do the long-term investing. All right, until next time, keep an eye on the markets. Thank you.